What's up, everybody? Welcome to the Stocks Channel. My name is Corey, and today in the stock market we did see a bounce across the board in the indices, but we still have the VIX above 30 and we still have a very strong confirmed downtrend. Where are we going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 1.84%, and so far we are bouncing off of that very critical support level at SPY 428. Remember, SPY below 428 is going to be a very significant breakdown, and if we break below that level, we could easily see SPY trending down towards 400 to fully close the gap. On the way there, you would have strong support at SPY 420 and SPY 411. Now to the upside, we're coming into very critical resistance levels, and we still do have a very strong bear trend with all the moving averages stacked to the bear side and a negatively sloping 20 and 50 moving average. So remember, I always tell you the trend is your friend, so the path of least resistance is still lower until we get the bullish breakout. So watch these very critical resistance levels just above at SPY 439, SPY 441, and then right around SPY 446 to 447. If we see SPY breaking out back above 447, we'll be looking a lot more bullish, but I would really like to see SPY breaking out above 450 and then holding above that level as support. It's very possible that we hit any of these resistance levels, make a U-turn, and continue to trend back down towards these strong support levels. So you really shouldn't be getting bullish against the trend, because the hardest trades to make are going to be against the trend. When we were extremely oversold and down here at SPY 411, that was your time to make the bullish long trades because we were just getting too oversold. But up here near strong resistance in a very strong bear trend, you don't want to be getting overly bullish. Get bullish near strong support and set your risk accordingly, but in a downtrend, you really should be just waiting or trying to short at resistance, because like I always tell you, the trend is your friend, and you always want to enter a trade near your risk level, because now you have the best possible chance to make a profitable trade, and if you do get stopped out, you only make a small loss, and that won't beat up your profits. So just respect the fact that this is a strong downtrend and we're coming into strong resistance, so the next few days you're going to learn a lot about this market. If the bulls are out there and we've seen the bottom and we're going back into a bull market, you'll get the bullish confirmation of the breakout, and then you can act accordingly. There's no way with a trend this strong in the downward direction that we're just going to run straight back up to all-time highs and never look back. Just not realistic, because all the momentum is still to the downside. So don't get FOMO that you're just going to see this rally continuing to all-time highs and you're never going to have a pullback to get an entry. That's just not realistic, and you're going to have plenty of opportunities to assess the price action and find a great entry if we do get the bullish breakout. Jumping over to the NASDAQ 100 triple Qs, we also bounced today, going up 1.68%, and so far that strong support level at 341 is holding up. But just like on SPY, we are still in a bear trend, and it's a very strong downtrend, and we're coming into one of the most critical resistance levels at triple Qs levels of 350. If we break out above 350, we have more resistance just above at 352, and above 352, then we could start to run all the way back up to about 361 to 362. Above 362, we'll be looking a lot more bullish, but that still is a long ways away, and we still do have a lot of downward momentum. So just like I said, all of the risk and reward is still to the downside at these resistance levels. So you really should be a bear in this trend, or you should at least be sitting in cash waiting for a better entry or a confirmation of a bullish breakout. If we break below 341, you're looking for a retest of support levels at 334, 329, and below 329, we're likely making that next leg lower to close the gap at triple Qs 315. So you have all of the critical levels from here, and you know the direction of the trend, so you should have everything you need to trade this market, and you should know exactly what you're doing if we break out above resistance or break down below support, and just trade accordingly and use great risk management. On the Dow Jones, we were up 1.75%, and we did find resistance right where you would expect at 340. Remember, if we close the week below 340, it'll look like a confirmed double top on the weekly chart, so that's a very critical level the bulls need to work to get above. Downside support levels will be at 338, 331, 329, and 322.6, and the upside resistance will be back above 340, and then you'll have resistance at 345 and 348. Just like the other indices, you're in a confirmed downtrend running into resistance, so respect the fact that you're at strong resistance in a confirmed downtrend. In the Russell 2000, we were up 2.38% today, and the Russell 2000 is looking like it's getting ready to retest that critical resistance level right around 207. If we close above 207, your next bullish breakout's above 212, and if the small caps can close above 212, they're very likely going into a bull trend. So watch those critical resistance levels, and to the downside, you have support at 200, 197, and 191. On the ARKK ETF, we were down 1.1% today, and again, we still have the full bear trend in the price action below all the moving averages. So if we start losing support at 64, you're looking for a retest of 60, and below 60, we're very likely going to start trending down towards $50. To the upside, you need to see bullish breakouts back above 70 and then starting to close back above about 78. Wait for the confirmation of the bullish price action and then plan accordingly. On the VIX, we were down 7.7% today, but we still see the VIX trading above 30, closing right on top of that 5 EMA, and we still have a daily bull trend in the VIX. Anytime you have a bull trend in the VIX and the VIX is trading above 30, you need to be extremely cautious. We have confirmed downtrends across the board and the VIX is still above 30, so this is definitely not a market you want to mess around with because it's still going to be extremely volatile. And remember that volatility does work in both directions, so just because the VIX is elevated doesn't guarantee that we have to go lower. But respect the fact that the VIX is at these elevated levels, and typically when the VIX is elevated, it's increasing the chance we could be entering a bear market. You can get a lot more bullish when the VIX starts closing down below 24, and confirmation of the bull market will be the next time the VIX closes below 20. On Bitcoin, we're currently down about 1.4%, trading right around 44,000, and we still are above all the moving averages with the price action, and we're slowly but surely developing a bull trend. The next bullish breakout will be above 46,000, and then we'll have resistance at 51,000 and 53,000. To the downside, look for strong support right around 41,700 and 40,600. Below those levels, we're very likely coming back down to retest support levels right around 37 to 35,000, and below 35,000, you're looking for a retest of 30,000. On NVIDIA stock, we were up 3.16% today, and it does look like we're starting to bounce off support, but we still need to break through some critical resistance. Bullish breakthroughs will be back above 245 and then back above 255, and it'll look like a confirmed double bottom if we see NVIDIA closing above 270. So watch those critical resistance breakouts, and to the downside, you still have support at 236, 223, and 209. On Tesla stock, we were up 1.8% today, and we did close back above the 20 simple moving average, but we're still trading below 900. Remember, below 900, you need to be very cautious of more downside, and we still do have the bear trend. If we break back above 900, your next bullish breakout will be back above 926, and then getting back above about 937. Above 937, your next critical resistance will be right up here at 996. To the downside, look for support at 859, 827, and 763. On Apple stock, we were up just over 2% today, and we are starting to run into that resistance level right around 167 to 168. Above 168, it's going to look like a bullish breakout, and then the next bullish breakouts will be back above 172 and then 176. To the downside, you have strong support at 162 and our support trend line at 161. And if we lose that support trend line, we're very likely coming back down to 157 or 153. As you can tell, we're developing a bear trend, so if Apple fails to break through this resistance, it's very likely going to try to make a next leg lower, which means we still could fail at support at 153 and go down to the next support level around 147. On the financial sector, we're up 2.59% today, but we're still getting rejected below a negatively sloping 5 EMA, and we're very close to having the full bear trend. The industrials were up 2.13% today, starting to look like they're getting a bullish breakout, but we're still going to have resistance at the 50 EMA. Above that level, we could go up here to close the gap at 106. The healthcare sector was up 1.5% today, getting back above the bullish breakout look, but getting rejected at the 50 EMA. Above the 50 EMA, we could start trending towards the gap close at 141. The energy sector was up 2.29% today, and it's still in that bull trend, still breaking out and still making new 52-week highs, and the next price target will be up there right around 74 to 75. We're going up on nice buying volume, so this is still a very strong bull trend. So jumping back over to the S&P 500, as you can tell, there is a lot of bear trends across the board in all of the indices and the sectors except for the energy sector, which has the least weight by market cap in the S&P 500. So you need to be very cautious, and the VIX is still above 30. So remember, the path of least resistance is in the direction of the trends, and all of the trends are still down. That doesn't mean we can't get a bullish breakout, so you still need to watch the price action. And if you get the bullish breakout, then you have confirmation that we could be reversing the bear trend, and then you can act accordingly. Even if we get those bullish breakouts, we'll still likely be due for a pullback. That will be your opportunity for a great entry and a better risk management setup. So be very cautious with elevated VIX in a very choppy and volatile market. And as you know, if you're going against the trend, if you tried to trade it before, it's very difficult, and I highly suggest you don't do that. Trade with the direction of the trend, or try not to trade at all and just wait for confirmation of the breakout. If you only like trading in the bullish direction, I completely understand. But for now, this is a very volatile market with plenty of more downside potential, so just be very cautious out there. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.